Welcome back everyone to another episode from Ang's channel. Today we're not gonna do stock review, but today I'm going to talk about the chronology of my investment journey for the histories, and basically it's just how I started. Why do I actually start investing? And also look into some future directions of which type of assets or tools that I would likely to involve in the near coming futures. So without further ado, let's get right into it. So first question is actually how I started. Back in 2020 during COVID-19, I'm actually starts to understand the market. There's existence of US market, stock market, as well as Malaysian market. There's forex, there's gold, there is so-called property investment, so on and so forth. But I didn't actually go into details of how it actually works and how such tools or investment can actually create wealth or generates a fortune for a lot of people, but also in a correct way instead of gambling. So I actually started out with Malaysian stocks. So don't be surprised because me personally, I live in Malaysia. So the basic idea is that I am being open to companies such as Maybank's 99 Speedmarts, the Oriental Copy, the Hapsangs, and which is sort of like products that I will be able to observe in real times when I go out into the market or during jalan-jalan weekend duty Malaysia, right? So the first investment tools that I involve in is going to be Malaysia stocks. So Malaysia stock is that one tools that actually get me so frustrated because it's so slow that I cannot actually wait for months or even days. Okay, the moment I actually bought my first stock, right, I do expect it to like go up 20 or 50% within the day that I actually bought it. So I was just staring at the charts and saying, what, why is it not going up? And it's just very crazy. And I do remember at that time, right, I didn't manage to, because I used the Rakuten trade, so you can, as you can see from the charts over here, right, not the charts, the slide. So there is so-called like cash contrast method for you to purchase the stocks. So basically it's the system whereby you have to execute it before the T+1 timeline or deadline before it will, or else it will actually sell it automatically. So at that time I actually don't know, and I was actually planning to hold long term because it's in a losing stocks. So I was like just put until it become profitable lah. But then I forgot which stock is it, but I think it's going down at that point of time because it's during like COVID-19. And after that, I actually didn't notice the stocks sell immediately without my notifications, and I was scolded by my father like, "Hey, you forgot to accept the contra thing, and then your broker already sold your stocks." And I was like, "Huh? Why?" Then I just lost like few $100, not dollars or ringgits lah. But then at that point in time, it's like very painful for me. And then after that day, I stopped trading because it's too much. Okay, it's not even so much movement within a day. I was so impatient at that point. I was hoping fast return, and at the same time, I have a loss 300 ringgits, which is some amount that I wouldn't have at that age. And I think that I move on is going to be crypto. So after COVID, right, during that point of time is where we have the crypto bull run, which is the Bitcoin running. So you can see over here is where the, yeah, over here, this is somewhat the date of COVID, right? After COVID, then we have this bull run of the Bitcoin during the 2021. So at that point of time, I was like, wow, this one's keep going up and up. And then I was thinking like, okay, I'm going to wait for the next crash before I'm going in. And then it's just keep going up, going up, going up until creating an all-time high at that moment. And then I was FOMO already, okay? Fear of missing out. And then I was like, no, this thing is not going down and it's not going down any sooner. It starts to create higher highs, right? Then I was thinking like, no, I cannot. I would need to buy and need to enter. So this is where I actually bought it. So you can see it's actually during, yeah, February of 2022, which is somewhere around here lah. So this is where the market starts to shift its direction as well as shifting its sentiments. So that fear of missing out from, right, something that I wouldn't want to experience again because I do understand the risk of trading with a emotion of fear of missing out because all you do will be buy at the highs and sell at the lows. So you won't have that much of safety margin. It's very risky because whether or not you know if it is going to go higher or it's gonna go starting to shift its sentiment and go bearish for year, months, which can actually lose your opportunity and lock your capital, which lose your opportunity to have better investment. So at that point of time, right, also my dad at that time also invest in crypto as well. But I think he earned quite well, but then also we just put some small capitals inside. But for me, it's quite negative because I actually hold it quite long until like 2023, and then only then I start to cash out. So but then I only invest like 200 ringgits plus, so I'm losing like 50 ringgit, so it's pretty fine, pretty cool for me. But then from that on, I actually stopped cryptocurrency because at the same time it's just buying at the highs, hoping that it will go up, but then at the end, no, because of the sentiment is shifting, and I didn't know that at all. I didn't even know that the 50, 100, and 200 moving average starts to sloping down, indicating a bearish trend. I don't even know that. So that is the time where I just buy in because I know that Bitcoin is going to go higher regardless. Because I have been waiting too long, waiting for 1.5 years already, and it still keeps going up. And the moment I buy, wow, it drops already very harsh. And the next thing is going to be Forex. Okay, so Forex is quite something that I'm insist because this is something that can make and generate you quick money if you do it correctly. But then it's super hard and it's impossible. That is why they say that there's a saying that only 1% of the trader in Forex only 1% makes money. So the other 99% is just the source of income for those 1%. So over here, you can actually observe that I deposit during the 2022 of July. So this is after the Bitcoin. So after I buy in the Bitcoin due to FOMO, right? And then it's like very slow, it's losing money. Of course, when you lose money, what is the next thought and next option that you will choose? To hold until it become break even or slightly positive, then only you sell, right? So at that time, I just hold my Bitcoin and just I sold until like 2024. But then that is where the another bull run is coming, and then I just missed out because I still have no idea during that time. For the Forex, I actually cashed in 500 ringgits, and this is where things started to get real because I have been trading Forex like demo account for quite some times and do get some decent returns with just boring strategies, stop loss, 2-to-1 ratios, and then yeah, it's very good. And then I was like, am I ready? Why not just try putting 100 ringgit, $100, so which is converting maybe like approximately $500, 500 ringgits. It's basically trading like euro dollar, the pound dollar, or even gold. But gold lot size, even small lot size, can cost up to like one pips is like $10 already, so it's very risky. So at that point of time, I do lost a lot but thank God at that time they have this promotion of if you deposit, you got another 100% credit. So at the time, I got another 500 ringgits into my account. So meaning total is going to be $200 or 1,000 ringgits. So I actually lost to a trade, but I cannot find the records that I actually hold it long term and I forgot to sold. And when I want to withdraw all the money, right, during the time of 2024, see, I can only withdraw $83. So supposingly I'm losing my whole capital, but due to the not positive, 100% additional credits from or promotion from the Okta, right? So there I will be able to lose just the amount from the credit instead of my own money. So it's pretty cool, and I didn't actually lose a lot from here. It will be very painful for me because at that time I open, right, wow, I'm already losing $100 to $200 already. Okay, and it's very painful. I just cannot see. I just cannot close it. I cannot close. I was thinking of whether or not it would go up because I'm holding it like a long term kind of thing. And if it were to be going to my favors my direction, I would have earned like $200 plus, but then that's not the case lah. So Forex is something very, I was somewhat very good memory, but then it's not very good experience because it's just very harsh And most of them is actually in terms of short-term trading, which takes a lot of time for you to look at the charts, look at the technical. But at that time, I didn't actually go into fundamentals to understand the currency strengths between the country. I don't actually know that, just based on pure technicals like the bullish candle, the pin bar, so on and so forth. Very short term, 1 minute chart, 5 minutes, 15 minutes. The largest is actually 1 hour, because if I go up to like 4 hours or daily charts, I will be very impatient, and I will start like, oh, this is boring, this is boring, and sometimes I even forgot that I'm actually trading demo account, and then I just give up. So forex trading is something that I would say, it's not that it's a bad investment tool, but it's just that it's not suitable for me, for my situation, because I'm currently studying and I have to put my time more towards academic or to social with friends as well. So right now, forex, even though I do understand people actually use like 1 hour per day to do trading, but then that actually doesn't suit my styles, because I fix 1 hour, it will then go to like I wait another 10 minutes, 15 minutes, 20 minutes for short terms, right? Because sometimes volatility can be very low during the morning hour or afternoon hour, which is Asian or London sessions, which can be somewhat lower volatility compared to New York session. So at that time, it's like very slow, and then it's hitting your stop loss, but it's not hitting because of low movements. And I will just keep looking my phone, open my broker's app and look at it and look at it, wasting for about like at least 2 to 3 hours per day just to look at the charts and see where it's moving. And it's very tiring, it's very exhausting, and I would not want to go back. But right now, I do understand that, hey, fundamentals, there is so-called like strength of the currencies. If the US Fed decided to increase the rate, the strength of the currency will be stronger. So in terms of trading EUR USD, you want to like trade bearish momentum. So that is somewhat new insights for me in terms of trading foreign exchange as well. So next up is where I actually starts to put a lot of effort, a lot of time, as well as this is something, all the tools that I stick with it for the rest of my life, and I want to stick with it because of its very time flexibility lah, for US stock market or even Malaysian stock markets as well, which actually starts to switch from technical to fundamentals. This is where I start trading US stocks. But before that, right, for US stock market, I actually started by also using technicals, because that's the only thing that I know. Or once the price dropped to the 200 EMA, forming a confirmation such as a bull bar, bullish engulfing, only then I buy and set stop loss, target price. It's more like a trading instead of like investment into the company itself. After that, like, because of still impatience and all those, when I lose a bit, so when I buy at this price, right, for example, I lose a bit, then I will be waiting for it to come back to my break-even level. I will sold here. This is my trading style at the moment, because it's very fearful, very scared that what if it starts to form like a double top and then it's gonna go down further. Oh no! But then when I sell, the market rips higher and rips higher. Because why? I don't understand. This is a very strong bullish sentiment company that is consistently providing growth for their shareholders, because that I don't know of that. Only then I start to engage myself towards knowing what is the fundamental, what is the economic strength, what is the company's performance, why does it actually affect the price, because that's actually how stocks market works. Because if stocks goes up, meaning that the company is actually doing well and earning a lot of money as well. If that is the time where I actually starts to look at the economic indicator, such as the CPI, the GDP, to indicate the strength of the dollars as well as its effect towards the stocks market as well. Besides, then I also, as mentioned, I look into the company's financials. Start by just normal, for example, looking how much they actually earn per year, the revenue, the net income, and it starts to learn about the PE ratio. But it's not actually quite useful for me right now. But I do sometimes cease to determine whether or not this stock is actually quite expensive, and their ROE, ROC. So why is that I'm going to actually stay in the US market? Because I prefer that long-term the idea of understanding the company. Because I'm buying something that I know, such as Apple, I understand the product, how good it is. People are actually willing to buy new phone even though they already bought the latest one last year, and just continuously growth in terms of net income and growth at that point of a time when you know you're buying something that is good and consistently giving you profits in the long run, and their businesses is continuously growing. It's actually like you are buying something that generates you money in the long run every year, every time. This is where I start to implement the buy and hold strategies, which most of the successful investors use, such as the Warren Buffett's, Adam Khoo, whereby they buy good companies, great businesses that will continuously generate income instead of just buy this because of cheap and then sell when it earns money and hold until it actually breaks even or become positive again. That is more like a trading side, but actually more like a gambling side, because you are actually not understanding what you are purchasing, what is the company or the business that is providing. So in terms of understanding what is actually the company is doing, it's very important, because you know, hey, if this company is providing, such as McDonald's is providing fast food, it has many branches across, franchise in Malaysia, in Singapore, in many different countries, and also from the financial status, it has continuously growth of income, revenue, as well as great free cash flow. Then hey, isn't it this something that is very strong company that will always consistently providing the products to the user, because the consumers actually cannot live without it. For example, another is going to be the Coca-Cola. This is something that people cannot live without. Another example is going to be like phones, gadgets such as the Google, Meta, Apple as well, or even Microsoft. This is where long terms come into play, whereby I'm not actually need that extra time again to like stare at that chart for that long time to see whether or not, oh, is it going up, is it going down. Although right now I do spend a few time to look at the technicals and see how well actually it's been doing, but most of the time I will be looking at what is the news, what is the current situation of the company, and what is the recent quarters of earnings for that company, to see whether or not it makes quarterly high, or for these few quarters it starts to have reducing revenue and net income. And this is where I want to keep on navigating and review whether or not this stock is still in a strong position of being a strong company. So this actually suits my style, because I have more free time to do whatever I want, even though the return is very slow, because as we said, it's buy and hold strategy, which involves long term, and it can takes up to like 1 to 3 years to even 10 years to see the results. But at least I'm making my money working for me and not trying to trade it or gamble it in order to like hope for a greater or like 200%, 2000% of reward, not knowing what I'm actually doing. So that's the point. The future direction, which is where I want myself to be at, right? What is the assets tool that I wish to involve and to learn? So first of all is that I will be keep on trading or invest in the US stock market, buying great companies, and consistently refine my portfolios and remove those companies that maybe starts to lose its strengths or economic mode throughout the years, and repurchase those that are strong again, and just keep constantly building up and re-strengthen my portfolio. Another thing is going to be Malaysian stocks, because it's actually the same thing, just different country and different businesses. So for example, I'm actually quite interested in the 99 Speed Marts, the Maybank, which actually provide a decent amount of dividend, which is like 6% or even 7%, which is pretty cool, even though the volatility is not as high as the US stock market. But at least I do have some approach. I do understand that Malaysia stocks have high dividends as compared to US stock market, and also it has very stable economics as well. And also I want to start, I already have small exposure to crypto market, but right now I really want to have slightly increasing, but then not too much as well lah, because crypto market is something, as I mentioned, I don't like crypto because it doesn't create values. Unlike companies that sell you McDonald's, give you Coca-Cola, give you services in terms of gadgets, your phones, your iOS, your Microsoft Windows, all those stuff, it creates values. Crypto for now, because I do understand people use them for transaction, for purchase purpose, but not many. It's not like common around the globe. So I still want to have exposure towards cryptocurrency or crypto market because I understand this might be the future. But right now, I'm not willing to just go into the market right now because it's at all-time high, especially when Bitcoin, Ethereums are actually creating all-time highs right now. It's a very crazy movements. And the next is going to be the options and forex. So options is one thing that I'm still learning on, and it requires margin, which I'm actually quite concerned since my capital is not that huge. So option strategy is right now I'm trying to just trade based on paper trading or demo account to see how it actually works, and maybe I will further refine it and try to put some small capitals just to trade options, because I do understand that option is a 80% above win rates if you do it right. Instead of buying options, you sell options. So that is where the key points come in. And another thing is I want to start going back to forex, but in terms of long-term trading, just as similar to our stock markets. This is where I look at the fundamentals, the currency strengths, what is the economic indicator, the CPI, GBT, the unemployment rates, and to see whether or not which forex or which pairs of currency is in the direction of bullish and bearish, and maybe even use like dollar cost averaging, which is I think somewhat is a best investment method in terms of forex actually. But I'm still trying to like demo it out because I don't want to actually put in the money first, as I do have some more exposure on the US market. And finally, it's going to be in the property investment. So this is something that I would really want to get myself into, because I do understand if you buy a house and you pay the installment, this is where they call bad debts, because you are actually paying and you are locked to that payment of the installments. Every month you have to cop out from your salary, for example 2,000, 3,000, and if your income is only like 7,000, you already cop out like half or 50% of your monthly income, which is can be very exhausting, as well as it can slow you down when you want to do something else, go holiday, go vacation, or even start a business with your friends. You don't have that source of free cash flow. So what they do in terms of property investment, right, it's not they stay in the property that they bought, but instead they continue to rent, but they still buy a house or a property, whether it's high rise, landed, or commercial lots, and they rent it out. And when they rent it out, this rental, if they find a good strategy locations, which or just good properties lah, the rental should be greater than their installment. So this is where the positive cash flow comes in. So this is where we get positive cash flow. So this is the ideal situation. So about property investment, it's not about making a lot of money at a single time, because it's very slow. This is the real slow and very slow moving investment tools, because every month you see if you get like positive free cash flow after reducing the installment from your rental, right, you maybe get like extra 100 ringgits or 200 plus, so on and so forth. But then it's not about the monthly 100 ringgits that you earn every month, but instead it's the equity building that you are actually trying to do from your rental or from the tenants as well, because he's the one that's paying for your installment. And when he's paying for your installment, you are actually buying this house for free. So in the long run, after 30 years or 20 years, your tenants may have already paid off like 50% of your whole mortgage already. So it's like you earn that 50% of buying that house. So it's pretty complicated. So in terms of investment, a lot of people will say this is gambling. You don't know what you're doing. What if the market crash? So aren't you afraid? The answer is yes, I am. Okay, I'm scared when I wake up the market actually crash, if the property that I bought actually have earthquakes or suddenly have wars, that my whole building just collapse and I lost everything. I am scared. But with a proper backup, I'm not. This is where emergency fund comes in useful, because before investment, my father actually taught me that, hey, you need to have a backup first. Okay, because my father also involved himself in investments, and that is why I also have this kind of knowledge, and I'm willing to like delve further into this kind of field, and I have more interest in it as well. So he told me emergency fund is very important, because you need to know that if your investment portfolio, for example, you put 100k in it, what if something bad, okay, just what if something bad's happened. The 100K that you put in actually went to zero. It has no value no more. So would you be able to still continue living with it? Yeah, you may cry maybe few days, few weeks, but then if whether or not you will be still able to provide yourself foods, electricity, water, clothes, place to sleep, place to stay, are you still being able to do that? If you are not, then you better don't start to invest, because this is where it is dangerous. If you don't have an emergency funds, they say there's a lot of sayings like you need an emergency funds up to 3, some people say 6 months, some people say a year. So it really depends on which makes you more comfortable. For example, for me, I prefer to hold a 6 months of emergency fund, so that I can actually understand that, hey, if I'm really messed up with my investment portfolio and I have to start from zero, at least I have this 6 months of living expenses, that within these 6 months I can go find a better job and try to restructure myself, think about what should I do next. I do think that 6 months is actually more than enough time compared to 3 months. So 3 months is kind of like tight, and it would be very uncomfortable for me to hold just 3 months. So I prefer 6 months. And if you were those kind of people who are more conservative, I want to be safer, I want to have a year, then yes, of course, because emergency, right, is never enough, because it's just something that is a plan B. And just to say, a lot of people say, why you prepare emergency fund is very, bad luck, bad omen. But then it's like backup, it's like insurance. You have to understand your limitation. Although your investment portfolio, from whatever amount you put in, such as 100K to zero, is barely impossible. It's like 0.0111%, hard to happen. But then it is always best that you have a plan B, that you can actually continue to live without any trouble. So that's the importance of these emergency funds. So lastly, I think it's the why should I invest and why should you invest. So one of the first impression about investment is that, hey, you invest, why? Because you want to get rich quick, right? Yes, somewhat correct, but not really, because it's somewhere you can actually start to grow your wealth. It's either two. You want to grow your wealth, or you want to preserve your wealth. Because for those people who have already have a lot of money, if you put inside a bank, right, for example, a million, after 10, 20 years and 30 years, maybe it will not be that same value of 1 million. Yes, it's a million, but what is the value of a million? Because 10 years ago, Milo is like 1 ringgit. Right now, Milo is like 3, 4 ringgits. So you're telling me your $1 million 10 years ago and 10 years now is you can buy the same amount of Milo? No, right? So it's the value of the money. So why? Because of inflation. So inflation, they say, is like about, to be more conservative, is considered as 8 to 9% of inflation, but most people just call it 10%. If you were able to beat the 10% inflation, meaning that every year you will be able to have your ideal cash to generate more than 10% for you, you are beating inflation. So investment is actually assets that generate you cash. So this is where they beat inflation, when you have a lot of capital. And for those who wants to grow wealth, why? Investment is a strong tool, because with proper strategy, proper tools and assets, right, you will be able to compound. Growth wealth is where the compounding comes into work. You're having 10% for your 100K right now. Imagine 10 years later, because each year you have 10% of returns on your 100K, right? Each year you are growing. Maybe at 10 years later, your assets is already at the value of 200K. So at that time, the 200K of 10% is how much? It's more than the 10% of the 100K, right? So this is where compounding works. They say, like Charlie Munger says, the first 100K is the B word, okay? Because it's very hard to earn. But after that, your growth of your investment will start to income of exponential form, because of the strength of compounding. So that is why they say it's actually better and it's the best that you actually start to invest as young as possible, as early as possible. But then you have to understand the risk, and before that you need to train yourself, go and understand what is the market, what is investment, what is the tools available for you to invest, and what is your choice. And I do have to tell you, from the chronology that I at least shared with you, right, you can actually tell that I'm some kind of people who cannot trade short terms, because I am very impatient, and I sort of like, I don't know what I am doing with the assets that I have, because I don't understand them pretty well. But right now, if you ask me, I know what I'm doing. I'm holding long term. Why? Because I'm buying this company that is actually creating more values and it generates more income continuously in the growing years. So this is what I'm trying to do right now. So that is why throughout the investment journey, you will face a lot of ups and downs, because maybe long term does not suit you, maybe short term suits you more, but you don't know that, right? You have to go through that process, start by choosing an asset. Hey, how about I start trading crypto first, and maybe after trading for 3 to 4 months, I don't think this is suitable for me, switch to forex, or this one is not suitable for me, switch to stocks. Not even stocks is suitable for me, switch to property. Hey, I like property, I like how it works. Then property investment is something for you. It is actually something that you need to understand what it can do and what you want, and do you have the ability to, which is the emergency fund. Are you safe to invest? So that is the most important part. You can do whatever you like, invest in any assets, but it's definitely not easy and requires time and patience. And if you do have that thoughts of, hey, I really want to invest, I want to grow my wealth, go through the process, start small capitals. It doesn't mean that investment requires like 10k, 100k initially. No, 1k, single $1,000 already enough. Maybe few $100 already enough for you to start investing. Just save up your ang pao money, right, during Chinese New Year. Then you should be able to start a very small capital portfolio and start to invest. And from there on, maybe you have your daily allowance, right? You have your school money, right? Save a little bit and put inside your stock market, your assets, slowly every year. And 5 years later, 10 years later, you will see great investment growth. But of course, that's under the condition that you actually go and study what you are doing. You choose the best decision that you make, and also based on your risk. But then people will say, hey, I only have $100, $1,000. How am I supposed to go for the property? So this is where I will tell you that investment's not for everyone, because you have to understand investment requires somewhat capital or patience, which is like continuously contributions. But then if you somewhat think that, hey, property requires a lot of money, right? Then you are in the correct direction, because you understand capital is very important. That is why you have to focus on your active income first, because investment is not your active income. It's more like a passive side of income, but you still need to do a lot of homework, review, adjustment of portfolios. So it's not quite passive, but yeah, it's called as passive income. So you need to spend a lot of time to invest in yourself so that you can get a better paid job, increase your position so that you increase your active income. With great active income, don't spend it on lifestyles, okay? People will say, hey, I increased my salary from 5,000 to 10k. Wow, very good already. I need to reward myself by buying great house that I paid and buying great cars, which is liabilities. You don't want liabilities in your life for now, okay? Maybe after you have raised your salary to 10k, hey, now I have extra 5k to invest into stock market, invest into my property, or invest into my crypto markets. So you live as how you live, but just don't treat yourself so harsh, like, oh, I eat rice and biscuit every day only. You eat healthy, you stay comfortable, you wear warm clothes, you go exercise, go maybe sometimes makan with your families and belanja your girlfriend and so on. Yes, you continue to do that, but then don't increase your lifestyles to like buying good cars, good house, which can definitely be a liabilities for you. So here is the last content. It takes time to understand your investment style if you continue to look for it. Investment is not an easy path, because a lot of people will be scared throughout the journey, because the profits won't come that easily. We'll be thinking like, hey, investment, gamble lah, so slow. Why people want to invest? Because it's very slow, it's very risky, especially when you don't know what you want, and you don't know what you are doing, and you don't know the assets or the tools that you are putting money into, because it can be very dangerous. And maybe it's something that is very good, but then you scared, oh, it will drop, then at break-even price you already sold. So that is the downside as well as the upside of the investment style. So I think that is all for today's video. It's a very somewhat like nostalgic for me, because looking back to the age of like 17, 18, trying to get rich overnight is very crazy. Just through forex trading, through whatever schemes or strategy they use, I just follow throughout the YouTubes. But then you have to understand, this kind of investment topic is very long-term strategies, long-term view. From there, grow your active income, And only then when you have a lot of capitals, right, then when you start investing, it's also possible, or even hire a financial advisor to help manage your portfolios for you, or just put into like money market funds such as Touch and Go, Go Plus, the Stash Away, Versa, many different apps. By the way, I'm not sponsored because I'm just a very small YouTuber. I guess that is all for today's video. And if you find this content very helpful to you, please do support me by clicking the like button, subscribe to my YouTube channel, share this video, and I will see you on the next one. I missed out a lot of things, but I forgot already. But yeah, I will see you on the next one. Bye bye.